Hello, everyone, and thank you for joining me today. My name is Russell Gard, Managing Director at Forward Prosperity, and this is our July 2026 Inflation and Interest Rates Update. Let's start off first by looking at the latest headline inflation number. Australian annual inflation has eased slightly to 3.8%. While any fall in inflation is usually welcome, this 3.8% inflation rate still remains well above the Reserve Bank of Australia's target band. The largest contributors to inflation continue to be housing at 6.8%, followed by food and non-alcoholic beverages, and recreation and culture, which were both at 3.3%. Cost of living pressures are still very real for most Australian households, and this is certainly reflected in people's reduced ability to borrow and invest money. Keeping inflation in mind, when we look at the Reserve Bank of Australia's preferred inflation measure, the trimmed mean reading is even more stubborn. Trimmed mean inflation represents core inflation, and this has now sat at 3.6% for 2 months in a row. This is important to highlight because trimmed mean inflation is the measure the RBA watches most closely because it strips out the most recent volatile pricing items. A trimmed mean inflation reading of 3.6% tells us that underlying inflation pressures have not yet been brought under control, and this can certainly give the RBA more reason to consider holding interest rates, at least for the time being. It probably doesn't surprise you, but housing still remains the single biggest contributor to inflation in the latest inflation report. Keeping this in mind, and although house prices have risen consistently for many years, many analysts now expect house prices to begin easing over the coming weeks and months. The big reason house prices are expected to come down is because of the recent tax law changes introduced by the federal Labor government. These changes to negative gearing exemptions and the capital gains tax discount are already starting to affect investor demand, and we anticipate this will gradually feed through into softer housing price growth, at least in the near term. When looking at general price stability, it is always worth remembering how sensitive Australian inflation remains to global supply chains. The 2026 conflict in the Middle East gave us a very clear real world example of how quickly global supply chain disruptions, even if they are on the other side of the world, can push general prices higher. From fuel to food to building materials, inflation caused by the 2026 Iran war has wreaked havoc across basically every single industry in our modern economy. Turning now to interest rates, there was no Reserve Bank of Australia cash rates decision in July. The Monetary Policy Board, which is responsible for setting the RBA cash rate, now only meets 8 times a year. As it turns out, July is one of the months without a scheduled meeting, meaning there was no cash rates decision for July 2026. The next cash rates and interest rates decision from the RBA will be tomorrow on the 11th of August 2026. Seeing as that there was no interest rates decision for July, I will now provide you a unique update from New Zealand. The Reserve Bank of New Zealand was active in July as they raised their official cash rate by 25 basis points to 2.5%. This was the first increase after holding rates steady for 4 consecutive RBNZ meetings. Similar to the Reserve Bank of Australia and the Reserve Bank of New Zealand's official cash rate is the primary tool the RBNZ has for keeping inflation between 1 and 3% in the New Zealand economy. Looking ahead, the RBNZ expects the New Zealand economy to regain momentum from the September quarter. In particular, the RBNZ highlighted two key supports for the New Zealand economy, namely in lower fuel prices and improving business confidence. Both of these should help household spending and promote broader economic activity in New Zealand. This now brings us to the price of oil. Global oil prices continued to fall through June as markets priced in a higher probability of a de-escalation to the Middle East conflict. Brent Crude finished the month of June around $73 a barrel, which is a significant drop from the peaks we saw earlier in the year when prices spiked above $110. Lower fuel costs are already flowing through to both Australian and New Zealand households. These lower fuel costs are also helping to alleviate the recent spike in inflation by reducing price pressure for general goods and services, both for households and businesses. Turning our attention to energy, let's take a look at the latest updates from the Australian energy market. When we examine energy generation volume, coal continues to account for over half of Australia's power generation at 50.28%. Renewables make up a substantial share as well, led by wind at 17.33% and solar energy, combining both rooftop and utility solar generation at 13.55%. However, when we look at total market value in Australian dollars, the story shifts slightly. Coal still maintains a dominant share of the energy market at $863 million. Interestingly, while gas makes up under 9% of total generation volume, its total market value sits at $289 million, outstripping wind at $204 million and solar energy at $178 million. Understanding these electrical generation and pricing dynamics are crucial as wholesale market prices feed directly into broader household energy inflation and living costs. So, what should you do with this information? The most practical step is to review your current mortgage and other debts. Interest rate settings on both sides of the Tasman are shifting, and the right structure can make a meaningful difference to your monthly cash flow. A short conversation with a finance and mortgage broker can often uncover opportunities to refinance, restructure, or simply give you a greater certainty and understanding of your current finances. Looking forward, two important dates are coming up very soon. The next round of inflation data will be released on the 26th of August, and the Reserve Bank of Australia's next interest rate decision will be tomorrow on the 11th of August. Both will give us a clearer read on whether the recent modest improvement in inflation can be sustained. At Forward Prosperity, our focus is simple: helping you build a strong financial future. Whether it's reviewing your home loan, managing debt, or planning for the next stage of your financial life, we are here to help. You can book a free assessment at any time on our website, www.forwardprosperity.com. Thank you so much for your time, and if this has helped you, please drop a like, comment your biggest question below, and subscribe to the Forward Prosperity YouTube channel for more economics and financial updates.